G'day. Welcome back to Pete's Investing. Today we're doing a share review and it's NVIDIA, technical analysis. And of all the magnificent 7 stocks, this one is the only one that's come up on the scan showing a positive bullish momentum. So let's get stuck into it. In terms of from May 22nd today, the record first quarter 2025 revenue, NVIDIA reported revenue of $26 billion for the first quarter, marking a 262% year-over-year increase, primarily fueled by its data center segment, which generated $22.6 billion, a 427% rise from the previous year. Significant profit growth. Net income soared to $14.88 billion, up 628% year-over-year, with a diluted earnings per share reaching 5.98. Strong gross margins. The company's gross margin expanded to 78.4%, reflecting efficient cost management amid high demand. For future outlook, NVIDIA anticipates continued growth, projecting second quarter 2025 revenue of $28 billion, supported by a ramp-up of its Blackwell platform, sustained AI infrastructure investments. Shareholder returns. The company announced a 10-for-1 stock split and increased its dividend by 150%, returning $7.8 billion to shareholders through share repurchases and dividends. So if you're a regular follower to Pete's Investing channel, you'll know that we look at the long-term trends as well as the micro levels of charts. So here we've got the monthly. Now you'll notice here the price is still above the moving average range, but notice as well we did have a bearish divergence some time ago, a few months ago, this on the monthly, and the CCI has fallen below, so that's a bearish divergence. Now what we look at is to see a Fibonacci retrace. Let me just expand that to show you what I mean. So if we draw a Fibonacci retrace from that high, we take it back to the significant low. Now, the significant low is back there. That was back in September 2022. And you can see there the price retraced back to the 38% level. And that was broken and it dropped far, that wick of that candle dropped as far as that 50% retrace, and it bounced from there. So it looks like it's probably completed that bearish divergence on the monthly. I did draw this previous target range, and that was a Fibonacci range, I believe, to that level there. Yep. And that was a smaller Fibonacci range. So depending on which area you take the Fibonacci, I like to take it back to the significant low. Either one, it broke through the minimum 38% range of that Fibonacci level. So let's now go to the weekly chart. And the weekly chart as well had another bearish divergence here. And again, we've drawn a target range there, and that would have been down to that Fibonacci range. But if we extended it from that high, again, back to that low, you can see there it's bounced right off that 50% Fibonacci range. Now that CCI is still dropping, or was still dropping, and it's finally broken above on the weekly, above the moving average range on both the price and the CCI. And what that means on the daily, we've had a break above both price and CCI as well, and also importantly the CCI 1500 is starting to curve upwards as well, which is more of a smoother trending indicator that I use, which helps iron out all these bumps on the CCI 150. So that's a CCI 1500. So again, the daily is broken higher than the moving average on the CCI and also the price. Now, what we do in terms of testing, if we jump to we also look at the intraday charts. Even if you're trading on, depending on what time frame you're trading, you look at the micro level as well. So here we've got the notice here, we do have a bearish divergence from that high to that low, from that high to that high, lower highs from the same period, slightly higher highs on the price. Now that actually is broken down. So what we do now is we measure a Fibonacci. This is the 1 hour time period. You can see there it's still way off from its 38% range. So we expect it to hit that range as a minimum. It could go a lot further, of course. So just be careful. This is the daily here, and you can see there it's coming back towards that moving average range. So don't get cocky and put too much into it. Let this bearish divergence play out. So I'd like to see this. Normally you want to see the CCI 150 moving in line with the price, and that's what it was doing back here until at this point when it showed a bearish divergence. Let me just go back and see if there's any other divergence we noted. So you can see there that CCI is moving in line with the price, so that there was no divergence back there. And the previous one we would have seen, okay, it was back here. We had a bullish divergence. You can see higher lows versus lower lows on the price, and that bounced. And if we took the Fibonacci to that level, that would have been probably around about the 61%. Yep, broke just above the 61%, and then it broke down again. So always pay attention to these divergences. Now at the moment, we're only going long. If we're trading on the hourly, we only go long, but again, just don't go long yet. I'd like to see this play out first. But to show you the back testing, what I've done here with the back testing, this is let me show you the 1 hour first. So depending on what time frame you're trading, if you're trading on the 1 hour time frame, you would have started back here. I've got the top here is the stop loss approach, and here I've got the average down. So you would have taken the first trades when that broke above the CCI on the daily if you're trading the 1 hour. The stop loss approach is generated about $30, and the average down approach, because you average down here, you've multiplied your positions, generated 397. At the moment, both of them are closed out with no trades open, and that's a good thing because we've got a bearish divergence on the 1 hour. Now, if you're trading on the daily, let me just change that to the daily, in which case we've got to change the higher time frame to the weekly. So what we're looking at now is a fresh breakout to the upside on the weekly, both the price and the CCI. So we only take long trades on the daily, and that starts back here. The daily would have broken long there. Similar time frame to the 1 hour, you would have taken the positions there. Now the stop loss approach has generated $148 so far, and the average down has generated $265. That assumes you're investing about $1,000 for each position held. You can see there we averaged down once there, closed it out, averaged down again, a second position there, and then closed it out with some other single trades made here. The stop loss approaches entered and exited with one trade only, $1,000 lots only. Now you'll notice here on the daily, it's about to hit this moving average range on the CCI. So I'd suggest as soon as it breaks into that range, don't take any more trades. And as I said, we've got a bearish divergence on the 1 hour, so we might see a bit of a pullback in the next few days possibly. So if you're new to trading, we're now including a weekly video series, Pete's Investing Plus One, as part of the Pete's Investing channel. The Plus One videos are a dumbed down version of our strategies and give you a better insight into our analysis and help you follow our daily videos. And if you enjoy the content, help keep me motivated, keep doing these videos, subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across various regions of the world's markets. Think of it as sitting down with me over a coffee. Thanks, and talk to you in our next video.